All right, welcome back. You're watching NewsX and I'm Shivani Singh. Now, Reliance Industries has said that it would consider buying Venezuelan crude oil if sales are permitted to non-US buyers, signaling potential interest from Indian refiners should restrictions ease. The company, which operates the world's largest refining complex, said that it is awaiting regulatory clarity before taking a decision. A Reliance spokesperson has said that the company will consider purchasing Venezuelan oil in a fully compliant manner if access is allowed. Now, industry sources are also saying that state-run refiners like Indian Oil and Hindustan Petroleum are prepared to consider Venezuelan crude under similar conditions. Remember that Reliance had indicated earlier that it will not take Russian crude in January. This is a move that has pushed India's Russian oil imports to their lowest levels in years. Now, additionally, Reliance has stopped buying Venezuelan oil from March 2025 as President Donald Trump had announced a 25% tariff on nations buying crude from the South American producer. The conglomerate has received its last Venezuelan oil cargo in May last year. Now, let us take a look at how much oil India imports from various countries and also their share, and let's also additionally compare Russian oil and Venezuelan oil. This is very important. It comes at a time when US has taken over per se of Venezuelan crude reserves over there after they ousted the President Nicolas Maduro. So, let's look at India's oil imports. Let's look at the whole picture, the pie graph, where actually Venezuela stands. So, Venezuela is only at 0.3% and the largest share, as you can see, is by Russia. So, Russia has the largest share of around 37%. You also have Iran, you have UAE, and you have the US with 6.5% of the Indian imports. You have Oman 3.5%, and you have others who are making 10%. But there is a singular red line. What's most important for us to remember is Venezuela currently is only occupying 0.3% of the entire basket of oil imports. Russia has the largest 37%, and now with US actually offering, if Reliance actually is saying that if regulatory clarity is there, they might look at more oil imports from Venezuela. So, this is basically how the entire pie chart looks like for India. Now, let's look at what the dilemma actually is. Price difference. Russian oil, historically it is 9 to 15 dollars per barrel below the benchmark. So, 9 to 15 dollars below the benchmark of oil crude that is imported across the countries. Russia offers it at a lower price. Venezuelan oil, 5 to 6 dollars below benchmark. So, obviously you will see a slight decrease over here. The discounts that we were getting from the Russian oil will reduce because Venezuela only offers 5 to 6 dollars per barrel. And what's the quality like? Quality also differs. Remember, the crude oil quality in Russia is medium to heavy sour crude, which is easier to process. So, remember, a lot of money also goes into processing this. You cannot use crude as it is imported. So, for processing, Russian oil was easier. Venezuelan oil, on the other hand, it is extra heavy, it is high in sulfur, and it is very difficult to process, and hence the whole question actually arises as to how much investment is going into processing the Venezuelan oil. Also, let's look at the Jamnagar refinery compatibility. Remember that Reliance has one of the largest refinery complexes, and if we look at Jamnagar refinery, Russian oil, obviously it could process. So, along with other refineries, they are configured to process the Russian crude oil. As we mentioned, that it's heavy and it's easier to process. Venezuelan oil, you have a Jamnagar refinery actually processing it, but the other refineries are not capable of doing so. So we obviously are seeing that one refinery is capable of processing the Venezuelan crude that we plan to import. Let's also look at the reserves. Russian oil, the 80 billion barrels is what the reserve looks like from Russia. Venezuela has 303 billion barrels. It's a huge difference. That's why sometimes Venezuela is also called as a country that's sitting on top of oil reserves. However, there is a marked difference because the production capacity actually comes into the picture, and that's what we are going to tell you next. Russian oil actually, it processes 10 plus billion barrels per day. Look at the staggering number, 10 plus billion barrels per day. Venezuela, on the other hand, only 0.9 to 1.1 million barrels per day. Look at the stark difference, and that's where production comes into the picture, that's where investment comes into the picture, and how we are looking at imports. So imports, if you look at, like we said, Russian oil, India is importing around 30 to 40%. We saw in the pie chart earlier it was around 37%. Venezuelan oil only 0.3%. A lot of factors contributing to this. It's heavier to process. A lot of refineries are not capable of refining this as well. So this is basically India's oil dilemma that we are looking at. Let's in fact look at why all of this is important, because remember that oil is the main reason why US actually looked at ousting the president over there in Venezuela. But let's take this discussion forward in fact with Dr. Ajay Dua, former Commerce Secretary, and Mitali Nikore, economist, who are joining us on the broadcast. Thank you so much to both of you for joining us on the broadcast. We appreciate your time. If I can go to Dr. Dua first. Sir, with US actually, they are targeting, they're looking at 30 to 50 million barrels for its own consumption from Venezuela. How much do you think feasibility wise is Venezuelan crude left? How much high quality crude will be left for India to import once US actually takes its share?
Thank you for having me in the discussion, Sangeeta. Shivani, sorry. What I want to emphasize is that as of now, at 0.9 million barrels a day, the Venezuelans are hardly able to make use of the potential which they have. 303 billion is what you had mentioned. So that is 0.3% only of what they have. They need to ramp up that production considerably. For that, they have to undertake a whole lot of remedial actions. One, get their refineries going, get their extraction process, which has fallen into shambles because no investment was taking place there. And more important, neither storage nor the pipelines. I'm just spelled out the different stages of the process, and then finally the refineries. Today, only one foreign company, Chevron, a US company which has been given a special license by the US, is operating there. The biggest company otherwise is their state-run PDVSA, which also has a retail business under the brand name Citgo, CITGO. Those companies are going to be needing lot more investment, lot more expertise, because there is no expertise also left now. Over the years, if you do not put money, people go and take jobs elsewhere. Production of Venezuela has come down from million barrels a day to 0.8. That means 1/4 of it, or 35% of it, over last 20 years. So that's number one constraint. Second is the fact that will political stability be there in Venezuela to be able to pull out more oil and export it? That is a question which we have to wait and see. Yes, President Trump says he's in charge, he will run it. That probably may be right, but let's not underestimate that the reaction could come from other countries, including Russia and China, who have already decried yesterday's seizures of the tankers on the high seas by the US. Reportedly, one of the middle-level officials of Soviet Union of Russia has even said that we are not averse to using nuclear weapons to settle this dispute with the United States if it continues to behave in this manner on the high seas, violating the international laws. Finally, on this context, I would like to say that the oil of Venezuela is what is called heavy oil and found in tar sands, and it is more fit for heavy duty work like diesel, like asphalt for paving the roads, as well as for roofs. It is not suitable for every purpose. The the Russian oil, you also pointed out, is far more amenable to a wider use. So the oil will, where are the facilities close to the US, close to Venezuela? Those are in the US, a state called Louisiana, and the other Texas. The refineries which have been set up by the US over the years, those two large refineries can use this oil, Venezuelan oil, to a large extent. That is why yesterday President Trump said we are going to be buying up at a discount of $5 each, $5 per barrel, an X amount of worth 3 billion US dollars worth of oil from Venezuela, because it is useful to them. The logistics cost is not so much. India, yes, Reliance has that facility. Reliance does have that facility, but at the same time, getting oil from there is only if it is available. If the US takes away this point 0.3 billion, point 0.8 million which gets produced nowadays, there's going to be hardly anything left there. And the US is very clear that it is we who will be deciding who buys and at what rate the oil is sold by the
Absolutely, absolutely, Dr. Dua. In fact, on that note itself, when India is looking at, you've spoken about a US monitored system over here. If we go on to buy from Venezuela, do you think India was in fact experimenting with the rupee ruble and the rupee, dirham systems and settlements regarding crude oil imports? Do you think that will also take a hit, because again we'll come under the dollar system because it's supervised by the US? And do you think in a world which is now decarbonizing, how significant will it be when India imports from Venezuela crude oil? Because India is also looking at other alternatives.
Yes. Shivani, I think let's be clear that we have in the past imported more oil from Venezuela, and the highest billing, if I recall, some years ago was $11 billion worth of oil came, came from Venezuela before the sanctions were imposed, and a 25% duty was levied. I'm talking of the era before that. That is prior to March 25. The paying for it, we have done it in two manners. One, some of the Indian public sector companies have put equity in the assets to extract oil in Venezuela. At one point of time when we had such a buoyant relationship in import of oil from Venezuela, we encouraged ONGC, Videsh and other companies to go and put money wherever the assets were there, and our public sector undertakings did go and do that. So some amount of payment is was by way of the dividend which was due to us from Venezuela for the money which we had put in there. But that now the situation has changed with the production having sharply fallen there. The dividend, that's a risk which we took because we had put money in the equity. If they're not producing enough, all the investors take a hit, including the Indians. But the important point is what you raised, saying the payment there would have to be in dollars, whether it is coming directly a sale by the US or at US instructed prices by a Venezuelan entity, we would be required to pay in dollars. And for that, it is for us, given our trade deficit, it is a burdensome job, and that is where payment in the local currencies, be it the Russian ruble or the dirham, etc., was coming in handy.
Absolutely. In fact, let me also rope in Mithali in this discussion. Mithali, what are the broader economic, implications if, in the refiners like Reliance do start off, buying off crude from Venezuela? And, Jamnagar, we've spoken about the Jamnagar refinery. India has the capacity to actually process Venezuelan oil, which is very difficult to process. It takes in a lot of investment, but we have that. Reliance has that facility available. How would that also affect us in the long run, sir?
Thanks a lot for bringing me to the discussion, Shivani. I think, I want to actually just comment a little bit more on the geopolitical implications of this, from an economics perspective. See, what Professor Dua laid out for us was almost like a macro picture and the mechanics. How can this work? How much can we get? How much is viable? But think about it from a relationship perspective between the US and India. What has happened in the last 1 year? In the last 1 year, we began our relationship with a lot of optimism. But then there were tariffs that were first, imposed in April, then actually levied in August. And even in August, it was a shock that India was under 50% tariffs. And just yesterday, there was an announcement that, it could be, again, it's not, of course, been levied yet and hope it will never be. But, India could be one of the countries where a 500% tariff is levied. Now, what has India done in response to this? India has been very measured. India has said, you know what? We are going to continue negotiating our trade deal. We are going to always talk about Indo-US relationship. We are going to, increase our purchases of US oil. So if you look at the data coming in November 2025, Russia accounted for 35% of our purchases, but the US accounted for 15%, and that was actually the highest increase year on year and month on month in the entire year. So India has really ramped up its purchases of US manufactured oil. Now, if American companies are going to go and make $100 billion investment in Venezuela, as President Trump has announced just an hour ago, it means that they will need buyers. Someone has to buy the oil which is being produced there. So, whether that is refined in India or if it is refined in Venezuela itself, which I think will be more of the case, and Indian companies may come in as, JV partners if the US allows. Imagine that now that resource is basically controlled by the US. So, in this case, the only way to move forward for India is twofold. One is to continue increasing its purchases of US manufactured oil in the short run, means in the next 1 to 2 years. And after that, agree to a certain amount of Venezuelan oil that the US will want to sell to us. It's good for us also, it will be much cheaper than the US manufactured oil. Having said that, at the same time, it is very critical that India recognizes this bargaining as a bargaining chip. We shouldn't just give away all, of our cards, and we should always say, here we are the third largest buyer of oil in the world, and we are ready to buy from you, but you have to make sure that our trade relationship is repaired.
Absolutely, Mitali. In fact, let me also, understand your perspective on this entire issue. Do you think this would lead to, a diversification of our oil basket? Because we will be looking at, an option that's not coming in from the Middle East, that's not, dependent on Russian oil. So we are adding a new name to our mix as well, to that basket. The dependence on, say for example, Russian oil, it was here when Russia was put on sanctions, it did hit us. So, the dependence also reduces in such cases.
See, for us, of course, diversification is important, but in a way, this changes the entire dynamics of the global oil industry. The US was always a taker, the US was always a buyer. Today, it's entering the oil markets of the world as a seller. What will this do to an organization like OPEC, which is the Organization of Petroleum Exporting Countries, which is largely made of Middle Eastern countries? What will this do to Nigeria, which is again one of the largest sellers of oil globally? What will this do to Russia? Of course, because even Russia is essentially surviving on selling its oil right now, and Iran. So, at the end of the day, we have to start approaching our geopolitical relationship with the US very differently, as though it is one of the biggest sellers of oil. So, I don't think it will diversify our sources so much, because Venezuela and the US are to be considered one, unit for the purpose of this analysis. They are not to be considered as separate countries for the purpose of this analysis. And therefore we have to realize that Venezuela will simply be doing what the US based oil companies want in this situation. So I don't think it will actually be a diversification situation. It will be some amount of concentration of power in the global oil market. And for India, we have to use the bargaining chip that we have, which is that we are a massive buyer of oil.
A quick word. If do you think this will also affect the prices globally?
Definitely, because the entire structure of the oil industry will change,
All right.
and we could see it going either way,
All
depending
right.
on whether they cooperate or compete.
Okay, all right. So unfortunately, that's all the time I have. But thank you, Dr. Dua. And